Thank you so much again, Anita. I'm Willmot Allen. I'm based in Nairobi. I'm an investor in healthcare, and today I'm here in the capacity of a social entrepreneur, VentureLift Africa. VentureLift Africa is a platform and an advisory firm that connects startups and SMEs, growing SMEs, to the resources that they need to grow and scale, particularly by linking them with diaspora resources, whether that's money or trade partnership, supply chain, et cetera. So why are we investing in Africa during the pandemic? That's the question that's on the table, and we have a great host of investors that are going to answer that question. The structure of today's conversation will be brief introductions, and then we'll dive into what I think will be very compelling and provocative questions about the nuts and bolts of sort of dealing with this period. If you have a startup, a growing SME, if you are a woman entrepreneur, you'll want to know that there are gender lens funds that are actually targeting companies like yours. Allow me now to introduce the panelists, and we will get started. First, no stranger to anyone, one of the hosts of this event, Eric Asiakwan, the managing partner of Chanzo Capital. Also, we have with us today Hannah Subayi Kumanga, who is a principal of South Suez Capital. We're also joined by Lalimba Firi, CEO of Africa Trust Fund, Evelyn Dio Simpa, CEO of WIC Capital, and also Falani Sangwini, managing partner of E4E. Eric, welcome. Are you with us?
Yes, I am. Thank you, Willmot. And for
Great. So Eric, can you start us off by just sharing a little bit about what you do and a little bit about why you are investing during this time? And then we'll take it around the table and then dive into our larger structure of questions.
All right, thank you, Willmot. So I'm part of the Chanzo Capital team. I'm based out of Accra, and we have an office in Nairobi and Johannesburg, together with the other partners. And we have seen a positive unintended consequence of the COVID-19 lockdown, in the sense that while some of our portfolio companies were having a very tough time, others were really gliding. So that motivated us to double down in certain cases, and in other cases, triple down and keep these companies going. And it's exciting to see that what is a disaster in the world is a positive for Africa, and therefore we are riding that wave.
Great. Hannah, welcome. Good to see you.
Hi everyone, my name is Hannah. I've been investing in Africa for many years, mainly at the private equity levels, aka deals larger than $10 million. But more recently, I have become a partner at Dazzle Angels, which is the first South African angel fund only led by women and investing in women entrepreneurs.
Thank you. Lalimba, great to see you.
Good to be here, Willmot.
Welcome.
Thank you.
Tell us about yourself.
Cool. So I'm Lalimba, based in Cape Town. We're gender lens investors, and we have 3 funds, 2 at the VC level that look at pre-seed and seed funding, particularly for women entrepreneurs across the SADC region, and an angel fund that looks at more innovative funding structures outside of equity. Yeah.
Thank you. Hey, Evelyn. How are you? Welcome.
Hi, thank you for having me today. So I am Evelyn, I'm based in Dakar, Senegal. I'm the manager of WIC Capital, which is a gender lens fund. We exclusively target early stage women-led businesses in Senegal and Cote d'Ivoire. And the fund was set up by the Women Investment Club. It's a group of 85 women that came together in 2016 to set up a fund by women and for women. So yeah, I'm looking forward to discussing a little bit more about it today.
Great, welcome. Falani, welcome.
Thank you, Willmot. So yeah, I'm Pilani Sangweni. I'm the founder and managing partner of E4E Africa, or Entrepreneurs for Entrepreneurs Africa. That we set up through a combination of working with having seen a need for us to come in and invest, not just invest, but also mentor entrepreneurs who are using tech and innovation to solve some of the most difficult challenges in our country, and therefore the rest of the continent as well, similar to some of the problems that Ms. Clark was actually talking about. I'm actually quite excited to share that we've hit the ground running, and COVID has been an accelerator for us in helping us really prove our thesis.
Great, thank you. Well, let's talk about the state of play in terms of some of the regional investment trends by asset class. I'll kick it off, and I'm also going to call in Hannah to give us the perspective from private equity.
Thank you very much, Willmot. When it comes to private equity, I think the trends we've seen in Africa are quite similar to what we've seen in the rest of the world, aka a sort of slowdown in the fundraising, deal making, and exit activities that are linked directly to the COVID and the lockdown regulations. This is quite logical given that COVID and the lockdown regulations have had a negative impact on the operational performance of the companies, or at least has created a certain uncertainty regarding the outlook in terms of growth and profitability. A lot of businesses have had issues when it comes to operations and supply chain management. I think at this stage, a lot of businesses have gone through a period of uncertainty when it comes to their funding and the debt levels. So as an investor, it's very difficult to conduct, good due diligence on an asset when there are so many factors that are unclear. On top of that, the valuation multiples were also quite unstable during the lockdown period. And I think the last kind of explanation regarding the sort of slowdown in the private equity market is obviously the inability for people to conduct physical due diligence and to meet, management teams and to visit companies, given that we are not allowed to travel. But I think on the positive side, we've seen some managers and top-in-class entrepreneurs being successful and raising capital. And this is explained by the fact that during this period of uncertainty, a lot of investors have focused on their existing relationships, doing deals with managers and teams that they know already in regions that they are familiar with. We've also seen a lot of adjustments in the valuations and in the deal structures to try to mitigate some of the risks that have been seen when it comes to the assessment of the operational performance of the businesses. I think at the end of the day, also investors have gone back to, the sort of basic equation of investing, meaning investors have focused a bit more on investment themes that they believe are going to be successful during this new area, which include, companies serving the mass market, right? Focusing on companies that deliver product or services that people need and not necessarily that people want, because in a period where nobody has money, obviously people will just focus on what we call essential products or services. So companies that cater for that market definitely sort of benefit from the crisis. I think interestingly, the two other themes we've seen is investors backing companies that have this B2B sort of business model, and also companies and African companies that serve or like that cater for this import substitution play, meaning that companies who historically have been importing a lot of product from outside the continent and suddenly now cannot, import anything, the borders are closed, are negatively impacted by the crisis, but companies who were looking, looking to use local materials and local suppliers in Africa are obviously now the new companies that are stronger after the COVID crisis. So I think there are still a lot of opportunities for investors to find the right businesses during these challenging times, but management teams, entrepreneurs need to make sure that they cater for the new market conditions.
Thank you, Hannah. I just want to say that the numbers back up what you say as well. Pre-COVID, I think there was so much excitement about the investment trends, even for early stage companies. You look at the VC numbers in 2019, 139 deals, 1.4 billion in transaction value. West Africa, the average size was 3 million. East Africa, 2.2. And even in private equity, exits were actually up, particularly in the area of trade sales and secondary sales. and between 2013 and 2018, 25 billion. So, and I just want to give a little bit more perspective. I started my finance career on Wall Street in New York and spent some time in Silicon Valley as well. And I can remember when the internet bubble burst about 15 or so years ago, and people were panicking, will it ever come back? And the truth of the matter is that out of that time came more innovation and more interest in taking risk on innovative companies, technology companies. The same is true with the global financial crisis as well of 2008. We saw a similar recovery. We know that this is really a different type of transition because it's healthcare based and it's disease based. But we just want to encourage everyone that investors probably won't say this, but they're also on the hook because of what we know as dry powder. And that money has to be deployed over a certain time still. So this is really not only a test for entrepreneurs, but also a test for investors to find the good deals, to help companies get through this transition. And one of the subjects we want to transition to is how have you all been able to, during this time, raise money? I want to start with someone, but before he talks about raising money, I want him to briefly comment on deploying money. Fulani, can you come in and talk to us about that? You just made an investment as proof that investors are still investing. And then why don't you tell us about fundraising and some of the experience you've had pre-COVID, and now as we go through this transition, what the outlook is for funds that are going through fundraising stages.
Thank you, Willmot. Okay, so I was saying we actually just have announced our first investment. We've made 2 investments in our sort of 6 months of operating formally as a fund. And the first investment is in a business called Enabler, which aims to provide micro job opportunities to unemployed youth in South Africa, which we have a very large number of, by providing them the ability to label data for corporate clients that are implementing AI and machine learning strategies. And it has helped us really demonstrate our investment thesis, because we've been saying to investors that we want to invest in businesses that are solving some of our key challenges in the South African society. And one of them is certainly youth unemployment. And the second one that we're going to announce next week is in the health tech space as well, in telemedicine. So, which has helped us from a fundraising discussion perspective to actually be able to demonstrate to investors that our investment thesis, there are opportunities out there that fit our investment thesis, in a very positive manner. And in fact, one of the investors we're talking to, who's based in Seattle in the US, has actually wanted to fast track the process of deploying money to us, because at this point, they actually want to invest in fund managers that are deploying money in critical areas. No one was really investing in the South African instance. No one was really investing in these sectors where other people have been saying it's very, very difficult to create growth and therefore create return. And we are able to prove that we can, and therefore investors are saying, okay, since you're demonstrating it, let's maybe, instead of taking a year to deploy money to you, let's try and do it over the next 3 months. So we'll be announcing that investment over the next 3 to 6 months from that particular investor space out of the US. And then second, from a fundraising perspective, another thing we've seen is private equity and listed investment management firms in South Africa are not finding good deals at that later stage of investment. So they actually want to learn about early stage investments, and they want to invest in us in order to learn about early stage investments, and we're giving them the opportunity to. So one listed, very prominent listed investment management firm will be investing in us again over the next 6 to 8 months. And then a small private equity as well will be investing over the next 3 months, which I'll be happy to share when that actually does come through. So opportunity is there, as long as you can demonstrate in our experience that your investments are making a real difference, not just now during the COVID crisis, but also post-COVID.
Thank you, Fulani. Can you just say briefly what your investment thesis is in terms of the profile of companies, your typical ticket size?
Yeah, so as I said, we want to invest in companies that will have a transformational impact in the sectors that they participate in, and the sectors that we think will have a transformational impact in society broadly, in education, AI/machine learning, in healthcare, in transport/mobility. In fact, our third investment that just got approved by IC yesterday is in the minibus taxi industry and implementing IoT in an industry in South Africa where everyone says it's very conservative industry. So we look for sectors that really the traditional investor has said it's too difficult to invest and make money there. And because we've got a diverse team that, I've been a taxi owner myself in my past life, are these things I can understand that a typical investor will not be able to understand. So we really look for those sectors where, in short, will benefit our investments in the long term, will benefit the majority of our society in South Africa.
Great, thank you so much. Evelyn, I'm curious, I think for many, the perception would be, without knowing how necessary funds are structured and the agreements in place, that many investors might be thinking about pivoting or changing their strategy. I guess maybe if you're in the process of raising a new fund, it's probably more germane then to maybe think about some sort of alternative approach. But during this time, how have you thought about that in terms of managing your portfolio and as you look to implement your strategy going forward?
Thank you, Willmot. For us, when the crisis started, for us it was an evidence to keep our investment strategy. I'm just going to come back a little bit on We Capital and how we are structured. Our DNA is that we are an angels network. The fund was set up by 80 women. We invested in this fund $1 million USD, and we started our first investment with this money. We are still fundraising, and we have seen the impact of COVID on the fundraising process. It has been a little bit slower over the last months, and but we are able to. We see this period as a way to do our track record, invest in businesses that we believe in, and we know that the investments are going to come later on. And we are also ready to put a little bit more money into the fund if necessary by the end of the year. So yeah, and the reason why for us it was obvious that we would keep the investment strategy is that we created a fund like We Capital to support women-led businesses in Senegal and Côte d'Ivoire who operate at a small scale. In Senegal, only 3.5% of women entrepreneurs borrow from banks and finance institutions, and that's because they operate at a small scale. 99% of the entrepreneurs are established as micro businesses. So this means that they don't have access to key resources to scale up. They don't have access to the right human resources, so the right skill sets to develop their business. They don't have access to technology, and they don't have access to capital as a result of that because they are not structured enough, they are not formalized enough to be attractive to banks. So we saw in these businesses, we saw in this an opportunity to bring more impact to our countries and to the continent. How will we bring this impact? We are strengthening these businesses that we invest in because our approach is to bring capital, but also to bring a lot of business support. We rely on the 85 members that we have who are experts in several sectors. We also set up a dedicated technical assistance facility just in July 2020. So for us, we really believe that by bringing capital, the right instruments, and bringing the business support, we are able to strengthen these businesses, allow them to access new markets, develop and create jobs. So this is a direct impact for the countries that we are investing in. And we also believe that there is a potential for superior return when you invest in women-led businesses. There is now evidence, thanks to McKinsey, that companies with women in the top management have a better financial performance than their peers. So with COVID, it's not changing. And most of all, with COVID, we see that these small-scale businesses are more impacted. They don't have the financial reserve to support these months where they have had dramatically less revenue, and they are not accessing the relief programs from the government. If I take the example of Senegal that I know best, the government has supported the private sector thanks to fiscal relief, postponing fiscal debt, and also through partial guarantees to the banking sector. but it's a partial guarantee. The amount is not, it's around 65 million USD. And so these banks are incentivized to support their portfolio companies. And these women-led businesses are not in this portfolio. They are not formalized enough also to benefit from the fiscal measures. So we are in this situation where the basis of our investment thesis is still valid. There is a lot of potential in these businesses in terms of job creation, in terms of revenue generation for the country. But they are not served by the traditional financing system because they are not formalized enough. And it's still true with COVID. So we have, for us, it's really important that local capital providers that are structured like we are, continue to make sure that these businesses are getting the funding and the support. But of course, as I said when I was starting, we had to adapt in some way. In Senegal, we didn't have a total lockdown. It was a partial lockdown. So we did part of some due diligence online. And when we could go visit the business, we have done that. We do integrate a COVID lens in our analysis. So the business that we look at have to be resistant, focus something that will be resistant to extreme events. What we have seen also, and that we're experiencing, we have a little bit more difficulty mobilizing capital from individual investors, something that I haven't mentioned. When we are a syndicate fund, that means that when we invest through the fund, but we also mobilize capital from angels on a deal-by-deal basis. So with the crisis, people are more hesitant to invest in these early stage businesses because there is an uncertainty on how the economy is going to perform in the coming months.
Thank you so much. Erica, I want to come to you. I would think that it's logical to say that if the private equity investors are coughing, maybe the angel investors, in terms of exits, might have the flu in terms of thinking from VC and PE, how you are going to be taken out. Talk to us about that. We heard from one of the premier angel investors today, Tommy, say that there are expanding chapters, I think 50 throughout the continent. How are you evaluating getting your money back now?
Well, I think that generally the stack is sort of, you go angel, venture, then growth, then
right.
private equity, then capital markets, right? But within that stack, there are exit opportunities, and so the private equity guys mostly give relief to the growth guys and then the venture guys, and because the private equity guys want to take a majority position, and that's an opportunity for some investors, to retire, or even some entrepreneurs to kind of make some money from hustling, building the business. And I think that ultimately is the capital markets. And I think that, the capital markets in Africa haven't had a good, the last 5 years, the numbers have not been that great, but the 5 years before were pretty good. We saw markets going up, and then we've seen a tanking in some cases. But I think that, now that we hit 2020 and on, I think that the markets are going to pick up again. And I think COVID is sort of has an unintended consequence. And I think we saw Filani make a point that the listed, companies are beginning to be interested in what he's doing, because they're beginning to realize that we're going to have alternative routes to deploy capital and also to make acquisitions. And actually, in the last op-ed that I wrote for July, I argued that M&A activity has really increased in Africa. I mean, we saw the Helios doing the big, merger with Fairfax, to create a permanent capital vehicle that basically means that Helios is able to exit all its positions that it's had, over the last decade, which is really impressive. And it was interesting that CDC gave it $100 million just before they announced the merger. So I think that what we're going to see is also an uncertainty. There's definitely consolidation, right? We also saw last week, Network International bought DPO, the largest online commerce platform, for $288 million, which in my view is the biggest VC exit after Mark Shuttleworth sold Thought to VeriSign in 1999, right? So I think 20 years down the line, the market is maturing. And I think that we're going to see more exits going forward. We're definitely going to see a lot of M&A activity this year. And I think that this now brings the whole circle around, Because in the investing world, if you cannot exit, if they are not exits, then it's hard for people to, certain investors just want to see that there's a way to get out before they get in, right? And for a long time, the markets in Africa have not had exit positions. And so one of the big questions when you're raising money, any investor is asking you is that, okay, show me the exit numbers. Can I see the exit data? And then, you start scratching your head, So all of us have been raising money with, some form of a story that, this is going to happen. And I think that COVID-19 is somehow crystallizing that, and we're going to see more of those M&As, and it's going to lead to a lot of exits. And I think suddenly, as more capital begins to get made in investing in African tech, and for that matter, in sort of what I call the application layer, you're then going to see more capital coming in. Because some people are going to be like, oh, actually, this thing makes money. It's not just a bunch of guys convinced me to give their money. But as people begin to make exit, we're going to see it. Another example that's quite interesting, obviously, Jumia has been a big controversy listing on the New York Stock Exchange. And Jumia shares went down drastically. I don't know if you saw last week, COVID-19 had an unintended consequence. They're now back to unicorn status. Their shares went back again up. To the extent that actually MTN is looking to exit because now the shares went up by 142% in the last quarter, right? At the beginning of the year, the shares really went down. And so these stories are beginning to add up. And I think that markets are cyclical, right? And I think that we're going to see the upward trend again for the African market. And therefore, we're going to see a lot of these exits, and this is going to excite, more investors to allocate to African managers.
Great, thank you. I know, Hannah, you have a hard stop soon, so I want to come back to you. We're not going to talk about the deals that you all have been excited about. Fulani has given us sort of one that's hot off the stove, if you will, and what he just shared. Then I'll go to Lalimba as well to talk about the same, then back to Evelyn. But Hannah, just over, I guess, the last year or so, if you can highlight for the listeners a deal that you think might be representative of maybe your typical investment strategy and maybe how you've had to kind of think about it differently given the current context that we're in now. Please, Hannah.
Thank you very much, Willmot. I think before addressing your question, I just want to bounce back on some of the comments that my dear panelists have made. I think when it comes to private equity investors, there are various ways transactions are sourced, and while VC-backed companies are one way to originate deals, obviously there are still a lot of family-owned sizable businesses, corporate spin-off taking place in the market that private equity firms can directly acquire. And equally, as Eric has mentioned, I think it's worth mentioning that a lot of VC-backed companies will not end up being acquired by private equity players, but will be, acquired by a corporate or might even be listed on a stock exchange. So I think all the stakeholders in the investment space in Africa have to remain creative and open when it comes to exit routes and opportunities, and that way we can all continue to work together and to find synergies. Now, if I move back to the sort of deal activity, I think I will answer your question in terms of, based on the crisis, how can an entrepreneur and a management team make their business sound even more attractive with the crisis? And I would like to emphasize that especially when you are a startup, it's important to show that you can, that you remain flexible, that you can pivot your business model, that you can diversify your revenue streams and always cater for your core market. I think it's also important in a time of crisis to make sure that you control your costs, your expenses, and that you make sure that you're not burning too many resources. And when interacting with investors, and sorry, I'm giving all those tools to explain to entrepreneurs what are the type of businesses and management teams who have been successful in securing deals. I think when you talk with investors, it's important to remain open when it comes to deal structures and when it comes to valuations. And I think in the past 12 months, we've seen more and more investments being structured in staged phases. So of the capital will be invested 1 month and 6 months later, depending on milestones or performance. The rest of the capital is being deployed. We've seen earn-out mechanisms being put in place, meaning that there will be an adjustment in the valuation in the capital structure by the end of the year, depending on the operational performance witnessed by the company during that year. Without being too specific, obviously, for confidentiality reasons, I would say that as highlighted by Teresa Clark and by some of my fellow panelists, obviously the healthcare sector has been quite active in Africa recently. The fintech sector has been quite active. Eric mentioned some businesses in the payments industry. So these are the industries that by definition are quite resilient and defensive, especially in a time of crisis, but also businesses that seem to be able to continue to grow even when the market will stabilize and market conditions will go back to normal, whatever normal will be.
Great, thank you. It's a very comprehensive response. We appreciate that. Columba, please come in now and answer this, I think, as you feel appropriate, but we want to give a diversified view of the deal that you have invested in, at least one, and maybe how you've thought about it, particularly with the gender lens.
Yeah. So for us, our gender lens means that we want to invest in businesses that are majority women owned to start with, but that also create opportunities for other women downstream. And so it's not just looking at it from that one particular business's perspective, but the value chains that they're able to create. And so with COVID, we've seen so many of these businesses pivot really well, that it's created so many opportunities for other women to also dovetail and become part of the supply chain for our businesses. I'll give you an example of two that we recently did. One was in the education sector that was focused on in-home small group homeschooling for young children in the age range of 18 months to 3 years. And when COVID hit, this model obviously had to change because kids would come together in a particular home in the neighborhood. And they had to change, and they pivoted their model completely to go online and support mothers online. As you can imagine, women are still disproportionately carrying the caregiving at home. And so with COVID hitting, being able to work from home became a challenge for a lot of women because they're still expected to be the ones to be front and center of homeschooling and keeping the children entertained through this time. And so having a support system around this platform proved to be such a hit that originally when we were looking at evaluating this business, their expansion play was quite regional. They were looking at expanding into the rest of South Africa, but the opportunity that this gave them now a global reach. And so now they have customers and clientele from across the globe, which was an amazing opportunity for them. And so that's one of our investments. So moving from education to edtech very quickly and pivoting and showing the robustness of the model. And now we're looking at a global company. Another one is in the fintech space, where they had a digital play to start with, but have been having challenges with some of the bottom of the pyramid type customers who still wanted to do a lot of stuff in cash, still bringing in their documentation in cash. But with COVID hitting, they've seen such quicker adoption and being able to move their products from not just lending, for example, to individuals, but also other small businesses. I mean, right now, there is a $3 trillion gap in financing for businesses who don't suit the venture capital structure, but also do not have the collateral for loans. And so there's such a space for more innovative models. And this company is doing that in the market. And so we're seeing great uptake from SMEs who don't fit the profile for either debt or equity, but can look at more creative stuff like drawdown facilities and stuff like that. So there's been some exciting stuff, whether it is a complete pivot of a model or it's an additional of new services and more innovative ways of financing. And for us, it matters because a lot of those businesses that are impacted, that are not typical for VC or not typical for debt, will mostly be managed and owned by women. And women's businesses have particularly been hit with COVID because they're in sectors like services and then, you know, industries which require so much contact, physical contact. Yeah.
Absolutely, thank you. Evelyn, I want to come to you now. I'm asking you to talk to us a little bit about Senegal. I know you have a lot of experience based upon what you're doing now with Capital, but maybe the listeners don't know that you also worked for Sovereign Wealth Fund, FONSIS, and that's a different symposium, a different webinar, as sovereign wealth funds are looking increasingly to co-invest with other institutional investors. But tell us how you have evaluated the landscape in Senegal, and maybe if you care to share more about a deal or very generally about an opportunity and opportunities that you see there.
In Senegal, how have we been impacted? Before the crisis, the projected both GDP growth was 6.8%. Now we are only at 1.1%. So the good news is that there will be growth this year. When I listen at my colleagues, people are focusing a lot on tech businesses, but in Senegal the ecosystem is really like traditional. There's still a lot to do with traditional businesses and including tech to enable them. When I look at our portfolio, we have businesses in several sectors, in the creative industry, in agribusiness, and these are still traditional activities with a big potential to grow, but really in a traditional way. So this is the state of Senegal today. A lot of opportunities, everything is to build, everything is to do. Even back when I was working at the sovereign funds, we are strategic funds. So the goal of the fund is a strategic fund. The goal of the fund was really to invest in the private sector and to attract foreign investors in diverse activities to make sure that we are strengthening local businesses, making sure that new businesses are growing and emerging. And this is really what's exciting, because the government has set up a sovereign fund that was 5-6 years ago. In the meantime, they have set up the Délégation à l'entrepreneuriat rapide, which is a key actor for startups and emerging businesses. So there is this ecosystem that is really dynamic of very small businesses with a great potential. And on the investment side, there are not a lot of actors. We have one private equity fund that has invested, I think, 1 or 2 times in the country, but is more targeting Africa as a continent. We have, besides Big Capital, we have Teranga Capital, which is one of IEP funds, and it is also targeting small SMEs. So there is this opportunity to grow these businesses, to bring business support, besides capital, to make sure that the private sector is growing. And even with COVID, I think businesses have been resilient, and that's also the point with small businesses that are not really formalized. They are not disappearing. I think in terms of impact, we will not be able at the end of the year to say, okay, COVID has negatively impacted the country because we had that much bankrupts, because companies are not going bankrupt. They are just not paying salaries. They are not paying salaries. They are not paying their supplier debt. So the impact is really more social, but businesses are here. They are trying to go by. During 2-3 months, that was a little bit hard. That was during the partial lockdown. But now activities are going back to normal. And we see physically people are going out. There is more enthusiasm. And this explains the fact that at the end of the year, we are still expecting a 1% growth, which is a good point for all of us and a good sign for all of us. I don't know if Eric, you want to say something regarding Senegal. I know that this year Senegal is your destination.
Sure, Eric, before you do, I just wanted to say to our listeners, please feel free to pose your questions in the Q&A chat box. We'll be going to those after Eric speaks. So Eric, Senegal is close to your heart. Was definitely a target, has been a target for you, especially this year when it comes to Angel Fair Africa. Can you talk a little bit about how you think about Senegal from an angel investment perspective? And this is an opportunity for a big commercial on Angel Fair Africa as well.
All right, you hinted rightly. So this year we're taking our annual Angel Fair Africa to Senegal, Dakar, but we have to do it virtually, which is, the new normal. But I was really looking forward to going back to Senegal because the country is a city that I really love. And I think that Senegal has come a long way as an entrepreneurial hub, a hub for innovation. And it's incredible that the government actually set up a sovereign wealth fund to invest in the industry. It's one of the places where the government took an active role in enabling capital and allocating to the industry. And that has capitalized and really moved the industry forward. So this year, our Angel Fair Africa, though it's virtual, is going to focus on Senegal. We want to highlight the work that Senegal and We Capital is doing. Another angel network in Senegal is DNA, Dakar Network Angels, led by Mariam Diop, who also works for Orange Digital Ventures. We also know of Patek. We also know of Teranga Capital. There is incredible capital availability and supply in Senegal. And in the same way, there's a very strong entrepreneurial ecosystem. Impact Hub Dakar, led by Aziz. The others like Suguba. There is Joko Labs. There's all these innovation centers in Senegal that people are not aware of. So we want to highlight all these innovative spot and entrepreneurs like I'm trying to remember the guy who built In Touch Senegal from nothing and grew it. Yes. So
who's also founder of Teranga Capital.
Who is the founder of Teranga Capital. So there's been all this incredible entrepreneurial activity that's happened in Senegal, and the essence of this year's event is to highlight that. So I want to take the opportunity to announce that this is officially the launch of the 8th Angel Fair Africa, and we're going to Senegal. Our keynote speakers are Lucy Christ, who is the founder, the author of The Bold New Normal. Her book is incredible and really creating the new age in which we are. So she's going to share her experience of how this bold new normal needs to fit in this new normal. We're also going to get a keynote from Teresa Clark, who was a keynote speaker earlier. She's going to tell her incredible experience. One of the things she didn't talk about was that her media empire actually did an acquisition last year. She's going to share those experiences. And then we're going to have Tim Draper also speak to us about investing globally in the new normal. And obviously my colleague investors on the panel are also going to be speaking. So it's going to be on the 5th of November. And we look forward to bringing you all back on the 5th of November. Mark it in your calendar. It's going to be a day activity like this. But we're also going to have entrepreneurs speaking, and we're going to have investors hopefully writing checks virtually. I'll let Evelyn give us the French version.
Great.
I'm going to read it.
So Hannah, I want to come back to you before you go. We do have questions now in the chat, and one of them is one that's probably not surprising. I think there's growing concern on the continent and frankly across the world about this, and that is the disproportionately less money that is going to local founders versus expats and foreigners. I have a perspective on that, but I'd love to maybe hear from you and others on that topic. Hannah, please.
Thank you very much. And very sorry, everyone, I really have to run in 2 minutes. But I think when it comes to funding, generally speaking, I like to remind entrepreneurs first, just make sure that you have answered the basic equation, which is, are you selling the right product and the right service to the right customers at the right price? If you haven't solved this equation, you can try to raise as much money as you want, but nobody will be invested regardless of your profile or where you're coming from. Then I think investors like to look at businesses that fit their mandate. So as an entrepreneur, as a management team, you need to make sure that you're pitching to the right investors. So you need to do your own due diligence on the investors you're pitching to. Is it the right industry, the right sector? Has this investor been active recently in the market? And when you gather all this information, the likelihood that you pitch someone who might end up investing in your business might be more helpful. Second point here, I think entrepreneurs have to be a bit more creative when it comes to sources of funding. So I think before you even think about, reaching out to angel investors or institution or even a bank or accelerators or incubators, you should keep in mind that there are a lot of alternative sources of funding that are potentially, by the way, less dilutive for you, which include pitch competitions, crowdfunding platforms. There are many in Africa that seems to work quite well. You should also consider donation, grants, and on top of that, you should also make sure that you reinvest the sales or the revenues generated by your business into your company, obviously. And to make sure that you're visible enough also in the market, you need to make sure that you're well connected to your ecosystem, that people kind of know you, because as an investor, it's really important as part of our due diligence to make sure that the entrepreneur is not, a single person isolated in an ocean and nobody knows this person. This tends to be a red flag when we do due diligence on a team. And then I guess entrepreneurs need to remain open-minded, because there are many initiatives now in the market that are trying to address the lack of diversity in the management teams that are receiving funding. More and more corporates, investors, investment clubs, and even banks are trying to address this gap. And as an entrepreneur, as a management team, you definitely need to remain aware, again, be connected to your ecosystem so that those funding opportunities come to you. Basically, I think that's my takeaway on the situation, but definitely, as you know, and as you mentioned it, Willmot, there are many discussions ongoing everywhere in the world. And definitely with Dazzle and Joe's, we are trying really hard to be part of the solution to all those conversations, backing only female-led tech businesses in South Africa. And obviously on my part, I'm definitely focusing on, women from poorer communities or poorer background that have been previously overlooked.
Thank you, Hannah.
Thank you very much, everyone. Sorry, I have to run.
We appreciate your contribution. Speak
Thank
to you soon.
you. Bye.
Would anyone else like to take an opportunity to answer that question? I think that was a very good comprehensive response from a technical perspective. I think there's also a sociology perspective as well. And we heard a little bit of that from Teresa earlier when she was asked, when she sort of evaluated the structuring of her technology event. Lulimba?
I'd like to add, I think from particularly the foreign VCs coming to invest into Africa, one of the key things that's making a difference, I think, is the ability to partner with local fund managers who might be able to help one identify opportunities which might not be so obvious for people who are not living in the context. Philani touched on this a little bit as to how the investors are getting surprised at some of the opportunities that they are finding. But if you can partner with local fund managers who can understand the context and translate everything from the cultural angles to the opportunity angle to the language angle, we will see a lot more investment going to local founders. It's not something that's just going to happen on its own and overnight, no matter how much we speak about it. It requires really quite a concerted effort from seeing more diversity on the VC side to translate to more investment into the local founders. And so thinking of ways of partnering and not going on this journey alone. After all, creating wealth has never been a solo sport, it's a team sport. And how they can bring in a lot more locals into the investment process, because we have to see diversity on the VC side. It's still very male white, and in a lot of places it's still very foreign. And so how do we ensure that we are supporting even first-time fund managers, because they might be great at spotting opportunities, and there's an opportunity for them cross-pollinating expertise from a local perspective and an international perspective from years maybe of VC investing in the West. And so I think that's an important piece. Yeah.
Thank you. I'll just add to that, and then I'll ask one more question before we close. Look, from the sociology perspective, I think it's very important to realize that human beings are largely creatures of habit. And that plays a role in our social life, in our relationship life, and our business life as well. And one of the things we're seeing in the US, I now live in Africa, in East Africa, is that when you diversify asset owners and the investors, you get different results. The new dean of Wharton Business School is an African-American woman. And she was interviewed and asked about diversity in general. And she said, the problem is that why we haven't seen more in corporate America, for example, is that there is a lack of intentionality, meaning there needs to be more intentionality. And I do think that that applies to the context in Africa in terms of supporting more local founders. Now, how do those two ideas converge? It's this. And I think we have at Venture Lift Africa tried to take this up. In order, I think, to structurally change that for a long term, you have to get more diaspora money coming into the continent, right? If you get more people of African descent investing in Africa, you'll see a change. Why do I say that? Because yes, it's the technical aspect of what Hannah shared. It's many of the aspects you shared as well. But it also has to do with some deeper experiences, right? There is, for example, in my experience, a certain amount of empathy where I know that if I, in the past have had an interview in America and someone makes a comment that, I just wasn't comfortable with this person if I were in the room on the hiring side, or et cetera. And you understand this level of comfortability, what it means and the complexity of it. Doesn't mean someone is racist. It doesn't mean someone has, all sorts of, equality issues. It has to do with the way they were socialized. But I think the remedy of that is to diversify. One of them is to diversify the owners of capital that are investing into the continent, which is why we are, Venture Lift, hosting a conference week of September 21st, which actually speaks to this and is an investment trade deal event targeting the diaspora. Let me move on to one last question, and that is, in terms of the outlook, we have a lot of estimates as to the amount of time it's going to take to recover. I'll just read a recent report from Africa. They did a brief survey and they interviewed about 49 people and asked them in terms of the impact of COVID, if the pandemic ended today, 33% said it would take between 1 and 3 months for their businesses to return to normal. And so I just want to ask you, as you evaluate your portfolio and your pipeline, what is your outlook on when you will kind of continue to go to the pre-COVID pace of deploying capital? Assuming now that things, obviously you're investing, we know that, Philani shared that and others, but I'm assuming that there's a slowdown. When do you anticipate that picking up? I think that might be of interest to those who are on the call with us.
We haven't slowed down. In fact, we're trying to pick up pace because we see the opportunities in this space have even increased. We launched a sub-fund focused solely on solutions which are providing a post-COVID future for us, because we don't see life going back to normal. I don't think we're going back to that normal. It would be a completely new normal. We don't know what that looks like. And so we launched a new fund that's focused on solutions that are being innovative and creative around thinking through the future that we want, which we definitely want to see a future with a lot more equality along gender and racial lines. And so investing in ideas and even technologies and business models that are a lot more inclusive has become super important for us. And so we are not slowing down, we're accelerating. And I think we are pretty optimistic in terms of even the growth that we are anticipating from some of our portfolio companies, because with COVID forcing a lot of digital migration, it means it opens up their markets to not just what they would have expected previously locally and a more linear growth model. There's potential for exponential growth to fast track some of the models. And so we're pretty excited. We are doubling down, and what we had as a target in January is completely different from what we have now. and it's on the positive side. So we're looking to actually increase our investments. Yeah.
Great. Anyone else?
That's also the same for us. We are looking to accelerate, actually. We see a lot of companies in our pipeline that have a lot of potential. We just announced our first investment 1 month ago with Ecover, a recycling startup. And this business has actually a lot of opportunities for marketers who, because the products of Ecover are actually imported, and the businesses that use this product have had difficulties importing it with COVID. So we hope that the first year of operation is going to give higher results than anticipated. And she is not the only one in our pipeline. There is a lot of potential. So for us, it's just going up and forward. I love the keynote of Teresa because it was really optimistic and highlighting all the opportunities that we have in Africa with this crisis, because we are not hit by the crisis like the European continent or the US. When I take the example of Senegal, again, there were like 10,000 cases, official COVID cases since March, when other countries are seeing 200 cases. So the disease is here. We are going to live with it. There will not be we are not going back to normal. We are going to continue to live with it. So it's important that we don't paralyze the economy. And that's actually why we lifted all restrictions. We lifted the curfew, because actually we have to continue. We are a poor country. We have to continue to produce and to source locally. So the opportunity here for us is that people are going back to locally produced goods, and the consumption has not been that impacted. The consumption of the middle class, that is still growing even with this crisis. So we are really optimistic at Quick Capital, and we are doubling down on the strategy, and we hope that we are going to double the investments realized this year, next year, and in every sector. Yeah.
Well, thank you all so much. I think we're about to at the close of our 60-minute session now. So Eric and Hannah in her absence, Evelyn, Limba, and Fulani, thank you all so much. I think what you and Limba have just shared has been music to the ears of the listeners, that you're doubling down and accelerating, because just as important as the healthcare workers and hospitals are, and researchers, medical researchers, to get us out of this pandemic with innovation, vaccines, etc. Capital providers are really important to the lifeblood of a lot of economies here on the African continent.
A couple of questions. I've been in the software space for a while. I've run software companies. I've done real estate. I've worked with investment money. We've had some major challenges. So there's some challenges we need to deal with. So firstly, I'm just going to express a few things, and then I'll have you maybe explain to me. Maybe I'm not an investment person, I don't understand. The nature of our environment is quite different from the traditional investment environment in other parts of the world. The money is traditionally coming from those parts of the world. And we have, let me show you some of the things. We've had 2 investors into our company in Ghana. Now, first thing we found was that they had no clue how our business environment works. I will give you an example. These are challenges that I think if we don't sort out, we will not be able to make anything work on a grand scale. So a minister has a funeral. We make a small budget to make a contribution to the funeral. Our investors, with a Western mindset, say we're trying to bribe the minister. So in the end, we can't do it. That has consequences in our culture. That is an example. Another example, another investor wanted to get out and out of the investment. It was the end of the period. And we told them that, wait a second, the books don't look good now. If you wait a couple of months, we are owed a big fat check from a government agency. They will pay. When they pay, the books will look better and it'll be good for you. We would like to see a situation where you walk away with something too. can you believe that we ended up in court because there was a delay in the payment, and they were suing us and trying to get us to melt company assets to pay them out, when we had been the ones to offer this better option. These kinds of disconnects. We've also had situations where our investors from the West spend all their time trying to ensure we're not stealing their money, making us spend so much time on reporting, making us spend so much time on, in my opinion, needless staff that can report to their format, cost the company a lot of money. This is another issue. Then the other thing we start facing is that the company is spending so much time managing investors because the investors are so concerned that these Africans are going to run away with their money, that the company's focus, now we're spending 60-70% of our time keeping the investors sweet. And when they're minority investors, it can be quite irritating. It's a distraction to the business. So secondly, the size of the investments that are available for Africa are broadly too big. We can't absorb the bite sizes that are being offered. If we do absorb $50 million, $200 million, then we have a second problem. Now state actors get involved. We need all kinds of permits. We become interesting to the political class, et cetera, et cetera. All these things, I think, need to be taken very seriously, need to be sorted out. I'm not just complaining. I will counter-propose that today, when we are challenged in a situation where we have a product, where we need to expand the product and scale it up, yes, we have stopped looking at traditional investment houses. What we do is that we make a list of where that investment money is going to go. We go to those companies and we put them in the revenue split, and we share the money with them, convince them about the model, and they become our investors. So we might end up with a product that has 12 owners. Those 12 owners, there's us and the 11. The 11 of them were people who were going to have to borrow money to pay. If we can convince them, they come in, we move, same effect. I want to hear your opinion on the things I've said.
Eric, why don't we start with you?
Thank you, Willmot, and Herman, thanks for the contribution, very important. I think that, the first is, Teresa made a very important point in her presentation. Generally, you want to go to investors not when you're desperate, and preferably you want to build a business on profitability, right? You generally want to be in a situation where you are avoiding people like me in your entrepreneurial journey. But if you have to deal with people like me, you have to be very conscientious. In other words, the same way if you don't raise money, your business is going to fail. Your business could also fail when you raise money from the wrong investors. So the way investors do due diligence on you, you have to do due diligence on investors. And one of the things I tell entrepreneurs is that the easiest way to do due diligence on an investor is ask other entrepreneurs that they are invested in, how is the relationship like? It will tell you a lot. If they're having a problem with that entrepreneur, that's a signal to you that you need to run. So a lot of entrepreneurs, unfortunately, what happens is that a lot of entrepreneurs wait till the last minute when they're desperate, and then they go and approach an investor, right? So you have a great company, great idea, but unfortunately you waited too long. So like I tell entrepreneurs, the right time to raise money is when you don't need it. So start talking to that investor when you are okay, because when you build a relationship, there is trust. We all invest on the back of trust. So Herman, the things that you were pointing out were as a result of not doing due diligence on the investors and probably not building a strong enough relationship of trust. So when you want to do something, they are suspicious, right? And trust building just takes time. And this is part of the reason we do Angel Fair. Every year we do this event because we use it as a way to build a community. We do a whole entrepreneurs boot camp. And this year, because there's COVID, we're doing an Africa virtual accelerator, AVA. The reason is that we take entrepreneurs on a one-week journey where we take them through these issues. Because you're right, when you're building a company, you're head down, you focus on the elements of making the business, which is the science of building a company. There is also an art of raising money that you have to focus on. And a lot of entrepreneurs don't focus on that. So Herman, you're right to the extent that there are a lot of issues. The last point I'll make is that this is also changing. Now you're having African VCs. Actually, on this panel, you have African investors, angel all the way to private equity, talking to you. So I know you raised your money. This was 15, 20 years ago, when things have not changed, but things are changing rapidly, where people who have made money are now reinvesting back on the continent. There are more people who are deploying capital that understand your business, understand technology, are coming from, an industry background, So I believe that we're making progress and hopefully we overcome these challenges going forward. But, so somebody said in a comment, the things you're saying are a whole subject to be discussed, right? But this is sort of my brief, off the top comment.